Hey everybody, this is Armand. Hope you're having a great summer. Today is Friday, July 26, 2019, and I'll be giving the quarterly update for b.labs Ventures and the portfolio companies. I'm making an extra effort here to keep these updates short, 30 minutes or less. So let's see how we do today and dive right in. You can see here the first slide, we're showing the labs company. As you know, we're a venture builder based here in Jersey City. And we have 5 portfolio ventures as well as our internal agency engine, BlueLiner. The biggest news we have, we're actually negotiating with 2 of our ventures right now, as you could see highlighted with the arrows, Adjustco and the Advocator. We just last week, a week ago yesterday, closed our deal with Adjustco to basically sell all of b.labs' interests. So that's going to be the big news and highlight for the day. I'll focus on that more shortly. We're also in a discussion about either exiting or somehow pivoting with the Advocator. So I will update you further on where we stand there today as well. But the news of the hour is certainly the Adjustco exit. This has been in the works for about a year now. We've been discussing selling our interests. I'm a co-founder in the company. We helped start this company back, as you can see the timeline here, 2011, and you could see some of the highlights we've had over what essentially was a real 4-year startup grind between 2013 and 17 as far as our main contribution with BlueLiner, with b.labs, helped raise over $4 million in different forms of debt and equity capital, generated $400K plus in service revenues for BlueLiner for doing a whole host of things, not just marketing, but technology, product development, and here we've established what is now a global brand with over 30 patents and with product in over 10,000 DIY hardware stores, including Home Depot, and what really amounts to about a $3 million overall positive cash scenario for us, and it's a $2.6 million buyout deal. It's our first exit. It validates the b.labs model and what we're all about in terms of utilizing our marketing, product development, knowledge, know-how, team, resources, relationships for the benefit of building brands from scratch. And that's exactly what we did here, and it's what we plan to do with the 4 remaining ventures in our portfolio. We said this back in the beginning. When we started Labs, we were always looking to have anywhere between 3 and 7 portfolio companies, and now with Adjustco's exit being formalized, we're down to 4 at the moment. Again, this validates our model. We're looking to do it, over and again in terms of building up the other brands we have, and we were able to achieve a 20x valuation growth from the founding stage to where the company Adjustco is valued at now. So we wish the Adjustco team, led by Jason Stile, my co-founder, the best of luck going forward. I think it really came to a point where we felt that we added the real bulk of the value and the real focus of our expertise, which is getting brands founded, off the ground, and on their feet, essentially. And from here, they'll hopefully continue to scale and grow, which only makes the case study better for us. And now we move forward with a nice infusion of capital back into Labs, which is going to go and be 100% reinvested across our other remaining ventures. So instead of having to go out and raise additional capital at this time, we can focus on using the proceeds from this Adjustco sale to fuel the growth of the remaining ventures in the portfolio, as well as BlueLiner. So the whole team's super excited. Just had a team meeting with everyone in the core group, and we gave a little toast to our exit event here, which is part of the goal that you have when you get involved in these startups. So we're really excited about that. And now moving on into the core numbers for the rest of the presentation, as well as updates on each company. For b.labs overall, we can see an uptick here in total revenues as well as weighted revenues. The overall net income is still a loss, but better than the previous quarter, similar quarter of 2018. We should be looking in Q3 at our first break even or potentially even profitable quarter with the proceeds from the Adjustco buyout. which is actually coming in payment plans over 10 quarters. So we'll be getting a quarterly payment that will register as revenue for b.labs, which is excellent. And you can see we've also lowered our overall operating expenses in b.labs to just kind of tighten up, since our initial capital raise from 2017 has been largely allocated. We've been in a bit of a belt tightening mode over the last 6 months, the first half of 2019. So you'll see that showing up here across the report. Blue Liner, some updates. Obviously, the Blue Liner team celebrating its contribution to the Adjustco brand building effort and recent exit. We're also in the process of launching several healthcare apps for our key medical and wellness clients this summer. We're introducing a new performance-based compensation model that I feel is a better, just maps on and creates a bit more of a startup a feel, and gets the project members working on different client work to be more invested in making sure those projects succeed. So I think it's going to, I think it's the way the agency world's moving in general, and I think it's a fair way to essentially share profits and revenues as the nature of agency business is to hopefully scale up, but does go through different peaks and valleys. And as that happens, having a model like this helps adapt our overall cost to the ups and downs of the revenue cycles. Again, mentioned this last time, we've also been in a recent rebranding and revamping of our internal brand for Blue Liner, as well as all the surrounding social media and other marketing strategies, as well as the way we approach sales according to different practice areas. So all that's been refined and kind of reworked, through the early course of 2019. Financially, we had a bit of a down quarter there, at least as related to the similar quarter last year, with total billings at just under $250,000. You could see the expenses were also brought down as part of the tightening of the belt that we've had to kind of map to that lower revenue figure. And we're working hard here, as we got 2 months left in Q3 to kind of bump that number back up. So I think the back half of the year is aiming to be and on track to be getting us back level and up from this current recent Q2 2019. Again, a lot of our effort over this last quarter has been to launch these app projects and also to support the b.labs ventures, and really myself personally focused on this Adjustco buyout. So I've taken a little bit of effort off maybe growing the Blue Liner business base, as I knew this buyout would be a good event for the whole company and help provide us with some much needed capital and funding. 7 Pillars really has been highlighted by the launch of our 7pillars.io marketing on demand platform, which we're launching in an exclusive partnership with the CHTA. This actually launched back in May. Connor and I, our marketing director, Connor Dalton, and I were just out in Miami at a recent CHTA conference to really highlight this product, talk to a lot of hoteliers and other tour operators in the Caribbean who are very excited about the potential of the product, and started to actually register. The first few orders have started to come through in this platform. And beyond that, within 7 Pillars, we're planning to launch, starting to work on 2 new books for this year, as well as the beta version of our SaaS marketing dashboard app. Hopefully be available by the end of 2019. The P&L, again, fairly steady. It's just revenue from the workshops that we conduct, the corporate workshops, as well as licensing and the certification program for 7 Pillars, both agencies and marketing professionals, an area we expect to continue growing in the back half of this year. And for expenses, we're keeping it light. It's essentially the 7 Pillars working with the Blue Liner staff to do basic social media and some basic marketing work, as well as the R&D and support for the marketing on demand platform. For TimeBug, which has its first product now officially in the App Store, the 2020 Life Vision app. There's also a book available in several formats. We're still not announced it. There's really no press or major marketing effort behind the app because it's still, to be honest, slightly buggy and still in beta stage. We're doing a lot of testing, a lot of QA. It is live in both iOS and Google Play Store. It's coming together. There's been over 1,500 downloads, and we're just continuing to iterate and improve. And I hope and believe we'll be at a point sometime in August or September to actually get behind this and start marketing it. It's obviously a huge market when you talk about personal wellness and goal setting, quantified self, people trying to better understand their own habits. That's really the space that we're in here. It's a growing space, the same space that Fitbit's on and Nike with their trackable devices and other big brands and tech companies. It's a space that is continuing to grow, and I think we're seeing that through the people that are just finding our app randomly without any active marketing. So once we do put a press release out and start putting some advertising into the different mobile and app ad networks, I believe we'll be able to get and attract hundreds of thousands of users, and then it's just going to come down to how we decide to charge. Since right now we're just offering the product for free, there's going to come a point where we put up a paywall for people that want to continue using the app to track their goals and manage their time, things of that nature. Those are some of the tools available within the 2020 Life Vision application. So I'm very optimistic about this, and look out for it. If you haven't downloaded it, just search Life Space Vision in your respective app store and give it a test drive, because it's getting to that point where the bugs are getting out and it's becoming a functional, really quality application. So that's our main focus for TimeBug, app promotion as well as the book. And so there's still pre-sales, pre-revenue, and we're keeping expenses, as you can see, very tight, way down from last year at the same time. And with this new buyout event that just happened with Adjustco, we are going to be raising that expense figure by supporting the launch marketing come Q3. Moving on to KidCoin. Obviously, with capital being tight over the last 90 days, development has slowed down. Thankfully, we're able to get the beta app product developed and in the market hopefully this September. That's the target right now. We're working with a great development firm, for hire, out of the Ukraine. And nice to see the crypto markets alive and well and picking up with Bitcoin generally over 10,000. I mean, it depends on what day you look at it. I think it re-peaked back at 13K recently. But I mean, it is important because it gets more press, more media attention around the viability of blockchain, excuse me, and crypto overall. I think there's enthusiasm on the more mass market side, and there's regulation coming to the market that's going to allow consumers and users at any level to get involved, not just about getting on Coinbase and buying some mainstream crypto, but about understanding how blockchain and cryptocurrencies at every level, at so many levels, as with KidCoin as a financial literacy product, actually have a real use case. So that's what we're aiming to demonstrate here, a real viable use case. We just hired an excellent PR firm, and we're planning a back-to-school campaign to launch in September or October of 2019. And we are opening up an equity seed funding raise in August as well. So if you're interested in that, definitely reach out to me, as opposed to offering tokens and focusing on the crypto as far as investment and investors. We're seeking a more traditional capped seed capital raise at this point, looking at about $500K for the seed round. Mostly expense mode here for KidCoin, but fairly tight at $30K spent in the recent quarter. And obviously pre-product, so pre-sales at the moment. For Adjustco, this will likely be the last quarter that we report on it financially, since we're on an exit formally. The only reason we report on it is because this is part of last quarter. And at the same time, since they're giving us a payment plan on the buyout, technically speaking, they're buying the shares gradually over the next 10 quarters. So technically, we could continue reporting on it, but I think that, to keep it cleaner and more focused on the ventures that we're investing and growing as opposed to the ones we've exited in, this will most likely be the last time I report major numbers here. And you can see it's actually a good sales quarter, 2 consecutive good sales quarters actually for Adjustco there at 280,000, 282 to be exact for Q2 2019. So nice growth path there, and it's also great to see that Adjustco is launching beyond its AdjustLock flagship product, is getting a test run with its Scribe-It item, which will be the second product that it has in Home Depot and other hardware stores, and also its alternative channel, which is more kind of B2B and MRO directly to construction and development firms with its Anchor Thread product. That's also starting to pick up steam. So again, we wish those guys the best of luck. We helped them build the foundation there, and now it's up to the new management team to get things to the next level. And again, that supports our model of getting in, getting a foundation set up, and having a successful exit, while still in the early stage part of the venture. Not an easy thing to do. Now, with the Advocator, we're considering a few options. It's been a little bit of a standstill in terms of what has been done with the product post completion of the beta application, which, with b.labs, we spent a good $250,000 to get the company and the product to become a reality from a vision. And now that's been available and completed for over 6 months now, but there has not been a lot of movement. And there's been some differences of, let's call it, philosophy and opinion from our side as b.labs and with the co-founders. So there's an active discussion right now, with one potential option being an exit, where b.labs sells our 19-20% stake in the company. And another alternative would be that we actually take over the full operation and grow the business with the resources we have from the Adjustco buyout. That's certainly a possibility, but it would have to be negotiated, because in order to take that level of responsibility, we would need more equity in the company, and maybe we could even license the underlying components from the Advocator and repurpose it and launch a different brand and a different company that utilizes the same business model and core technology that we built and technically own, a major part of. So all those options are being discussed right now. I hopefully will have a more decisive direction that's been agreed upon by the time we have next quarter's report. So I'll come back on the overall strategy, but as far as the financials go, there's really very little happening. It's basically just $500 or so a month for maintaining the server, maintaining the application, make sure it's still working properly so that it could be demoed. But unfortunately, there's really no marketing budget or effort that's taken place there. For better or worse, it's still a great product, and with next year's election cycle coming and so much emotion in the U.S. around this current presidency, really I believe it's the perfect time and timing for a political, socially kind of aware platform that has crowdfunding and the components that the Advocator has and the vision that it has. Really would be a shame to see it not actually be able to introduce itself into the market. But in order for that to happen, a startup company needs strong leadership, needs a budget, needs resources, needs marketing, and it needs alignment between the major decision makers. And right now, in all honesty, that's not fully aligned. So it's a big focus of mine. I was focused on getting the Adjustco buyout done first, And then with that now in hand, the next point of focus as far as major decision-making is concerned is figuring out a good way forward for the advocator or potentially an exit where we at least can get our costs covered for all the effort that we did put in. And that really brings us to the end. I made the mark, only 20 minutes, actually. It's a record time. So I'll leave you all with that. If you have any questions at all upon reviewing this update, feel free to send me an email. And again, our big enthusiasm, excitement, gratitude for all the shareholders, stakeholders that have supported us, been involved. This is a major victory for us. But we're not at all, in terms of the Adjustco exit, we're not at all satisfied or looking to rest on our laurels. It's just really, I see it as a proof of concept. And, you know, again, going back to the slide we showed there with the Adjustco exit and all the key high points from it, one of the high points is that every 1 or 2 years we're looking to make some kind of either exit or major market penetration with one of our ventures. And you know, I'm hoping for the next one to be, you know, 4 or 5x what we experienced here with the Adjustco exit. But that's for another day. For today, we're going to say this is the big news that was supposed to happen at the end of Q2, but for, you know, all kinds of legal reasons and little details got pushed into July. So July 18th, 2019 marks a momentous occasion for b.labs. And it's certainly a positive event that validates our business model, and I believe the other ventures we have in the portfolio have even much greater potential than Adjustco. So looking forward to continuing to March 4th, carry things forward and have more success. And in the meantime, hope everyone enjoys the rest of your summer, and we'll see you for the update come October in the fall. Take care.